And good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, October 4th, 2023. Fairly strong upside activity today in the markets. Kind of a little bit stronger than what I anticipated. And I'm going to start here with the NASDAQ, and I'm going to work on the 4-hour chart to begin with. Initially, I was looking for a much smaller internal minuet wave 4, and the market decided to just blast higher. And I think what was behind that, a lot of what was behind that, is again the reissuance of the dispersion trade. We had quite a run up yesterday in volatility and in the volatility indexes, and today we saw them get sold. And just a product of how that trade works. They're selling the volatility index, taking that available cash and investing it or putting it into the volatility of the companies, of the component companies within the index. And quite frankly, that's going to, and when we're talking about the NASDAQ, that's going to be Apple, AMD, Amazon, Google, Intel, Meta, Microsoft, Netflix, NVIDIA, particularly the Magnificent Seven. When the Magnificent Seven gets going in one direction or the other, it tends to carry a lot of the balance of the market along with it. Today, we saw Tesla just catch fire and ends up $14, almost $14.50 on the day, actually a little bit more than $14.50. I mean, that's quite a move. Was that short covering? I'm sure parts of it were short covering. Was it gathering up evidence to feel that what Tesla's earnings are going to be? Yeah, maybe. There's going to be 1,001 stories that go on. But really, when it comes right down to it, what we really need to just consider is that the many of the equities went up today. And there's many different components that will feed into what will contribute to a decline or the rally, what will accentuate or stimulate a rally or a decline. And a lot of that is premium. A lot of that is how the options are trading. Now, we know that there are, at least in all of the component participants of component companies within the NASDAQ 100, they all have options that expire weekly. All of them. All of the majors. Every Friday we have an expiration. And so we've now seen this week, because the last Friday was the end of the second quarter, we saw from Monday on, they were doing their adjustments. They were doing some heavy-duty buying. That got disrupted yesterday because of the ADP report. And that tossed everybody's cookies and everything got slammed lower, primarily within the treasury market. That triggered a lot of selling. The breaking of moving averages that we saw yesterday, the 200, and here in the NASDAQ in particular, drove even more. So that what it does present, again, when we come back to the next day, when we get that dispersion trade going, again, selling volatility, buying the volatility within the components, that can move the market. Because what does volatility switch over to when you're talking about an option? Premium. So they came in to buy the premium, a lot of retail. Traders and market makers in these individual stocks, they live to sell that premium. And their hedge when they sell call premium is to buy the underlying. So if you're going to continue as an options trader and you're going to continue to sell volatility, sell premium and an option, your hedge is you're going to buy the underlying. You're going to neutralize your deltas. And there are a lot of different trades, and algorithms kind of just go wild. There are so many different algorithms that are off, firing, functioning, working, doing whatever they do. all day long. So today we saw that more coming in on that one particular type of a trade. So what happened here in the NASDAQ is because I've had to go to what I had as an alternate and take a look at this wave 4, which I thought, okay, it's over. The minute wave 4 I had put here. We're working on a 1, 2, 3, coming up a little bit of a 4. I believe I had, that it could, I can't remember, like 4765-ish, maybe a little bit higher, maybe 4800. And then all of a sudden, this thing just starts cook, push, breaks what I had labeled as the bottom of minuet wave 1. No can do, fourth wave. You can't do that. So take a step back. I know I've gone over this before. And I actually, yesterday, after that, all that tremendous selling, had switched it back. So now this front and center one more time. We did not break. We got within 4 points overnight to break the low of minute 3. But we need to get down to here. We need this minor third wave to be at least 100% of minor wave 1. And at this level, it is not. So what does that really then tell me? What's the count going to be? I go back to the one that I had that I switched and now switch back. It is actually ABC pretty flat. And you can see that. Here's the A wave. Here's the B wave, very flat. And the C wave would be expected to come back up to 15,064. Right there. There's the 100% marker. And we got the 100 EMA, the SMA, the 100 simple moving average, coming in at 15,115 right now. If it continues to decline or starts to go flat, it'll be pretty strong resistance. So going into tomorrow, we can really look for, and again, they might happen overnight. And like I said yesterday, the selling could continue overnight, and it did. They just failed to go down to the level that I really needed it to get to in order to complete that. So to complete and put in that minor third and then produce this larger rally. So I guess a lot of algorithms miss the message. Like, no, you got to make a new low. It's like go below that 100% marker, 14,396. I got down to 589. So missed it by, less than 100 points, but still missed it. And so wave 4, minute wave 4, still in action. So again, a lot of people are going to be, I don't know if you're going to be upset, but you just got to go with the flow. There's no reason to suddenly go and get bullish. I'm sure a lot of you are going to come up with some, and you're going to leave them in the comment section, and that's fine. Having a difference of opinion, in my view, is what makes a market. That's why we have a bid and an offer pretty much at all times. So it's just like somebody's willing to buy it, somebody's willing to sell it. Boom, you got a trade. So having a difference of opinion is fine. But in what I've been presenting in terms of the treasury markets, in terms of interest rates, in terms of what is going on in the dollar, what is going on with the debt, what is going on across the board, and behind all of this, the NASDAQ's reaction today was way over the top, in my view. It's pushing too hard. And again, it's just a factor of, you got a bunch of people that are going to come in and buy it, and other people are going to say, well, I'm not going to sell it here. They move their offers, and off we go, and we go off to the races. Or if it's attached to an options trade and you're just hedging, you're just going to go buy it at the market. And again, if you look at a stock like Tesla up 14, it was almost 130 million shares of Tesla trading. That's pretty large volume. That's very, very heavy volume. There was a heavier volume today in our indexes, in the S&P and in the NASDAQ. Both had pretty steady, strong volume today. And so that's not a turnaround. It's just a product of a lot of short covering, a lot of changing, a lot of continuation of just rolling positions. So what can I expect from here? I believe we still now need to finish up this C wave, right? So there's the A, here's the B, we're working the C. C is going to be 5 waves, right? If I break it down and just take a look at the hourly chart, let's go inside. 1, 2, 3, 4, 5. 1, 2, 3, 4. We got the 5. In essence, if it did, it would be a failure. Is the market capable of putting in a failure? Yes. Particularly in the situation that we're in. Even if I break this down and take a look at it on a line chart, on the closing chart, they're not done yet. 1, 2, 3, 4, 5. This could be 3. It just gets very disjointed, and which is another thing that I've noticed with the advent of all the algorithms and so many things operating at one time within our markets. It does overextend, move. It takes us beyond the levels. It's like, it puts a lot of what you're looking for 5 and you only get 3. But it's going to have to fit in the pattern that you're counting. There's been a lot of switches and changes to Elliott. Now the basic rules, I got to hang on to them. Otherwise, then it's going to be something different than just Elliott wave, and I'm going to be measuring something different. But when I can get that, I will get that a lot of people will say, well, this wave 4 is going to be just way too big. It's way too big. But the wave 2, and then this wave 2 was fairly good size. So the 4, yes, in terms of distance, it's bigger. I would be looking for something smaller. But like that would have been perfect. But now we get this, and now we got that. Now, if indeed it ended in a small failure, did not make the new low below this third wave, got close, it's going to put a lot of pressure on the Elliott wave count for wave 5. Because wave 3 cannot be the shortest wave. So then I got to go bigger. So I'm waiting. I'm not going to this larger alternate view right now. Because to tell you the truth, if this was A, B, C, and I'm telling you I'm backing way up. Not necessarily in the S&P. I'm looking at it right here, but the S&P would have to follow suit. Because I just said to somebody yesterday, it's like, no, I'm not considering that it would be a minor 4. And then we're doing minor 5, and we go we break 16,251. Now that's yes, alternate. It sits out there. But what I have to consider, and what you'd have to consider on a technical basis, is it alive? Yeah. On a realistic basis, if I need to compare to what's actually happening behind the scenes, what are we confronting as an economy, as a market that has to work within the economy? So what is going to be the stimulus? The Fed is not saying, oh, yes, we're cutting. Oh, yes, we're going to pause. Yet again, there's no discussion of that. It's like, okay, when are you going to raise and how much? And is that going to be enough? Or what do we got to look for going forward? You don't watch the treasury markets just take nosedive after nosedive. Now, yes, they're doing a bounce, just like the equity markets, but the equity markets the NASDAQ actually overdoes its moves often. So I'm not ready to toss in the towel and say, oh, yeah, we're just going to start going up again. And all, everything that is really ailing the market will just still be there, but we're going to go up anyway. That's a recipe for an absolute devastating, crushing decline. And if that actually happens, I would be just like standing on the outside going like, wow. Because there's going to be some of the larger players who will be so short and they'll just sit and wait. In any case, let's just deal with today. I'm looking for a completion for this fourth wave. That means we still have a minute fifth wave down that I thought was well underway yesterday. So that still needs to play out. And so once I do get this 4 in place, and I'll do a guesstimate and say this is how high it gets, then I will put in, let me switch these around. Let me just take a few things out because I'm going to have way too many different Fibonacci sitting on that chart. So we want to go out and we're just going to be looking at if wave 4 completes at that, except it took out the marker that I wanted. Crud. I think it was going to be like 15,000, right above that level. 63, we're going to call it. Hold on. Sorry. I can't remember what the number, and I want to try to be accurate here. I want to go from there to there, and I got 16, and I've got, oh, that was the other one. What I want to take that one out, and I will put in, let's do it this other way, which was basically, we're just looking for the flat, but because we went up a little bit more, 63, 15,063. Okay. So let's put that other one in, and that's going to be from the 4. So we're going to do the 3 down, take minute wave 1. Come on. Put it over here to 4, and we're saying that 63 is the target. So our target, 57. So again, we're back to this flat, right? And we need to get down here. So I'd be looking for that strength to come kicking back in. And there's the equality, 15,557. But I'm looking for it to get below 15,000. Oops. 15,586. This would be bringing it down to 57. Gives me that little bit of extra room, and I would take it. But I'm looking for it to get below 14,396, so that 1.618 brings us down even further. So that's just eyeballing it right now, and that's saying if it got to that level. So we have to wait and see because we don't know yet. So again, fourth wave to complete, still looking for the fifth wave to come down. That'll complete a minor 3, and then we get that larger minor 4, another run up. So basically, wherever this ends up on the downside, and wherever this ends up here on the upside, we come down and we get down into these levels, then that wave 4 is going to take us right back to these levels. So it's going to sound crazy, but that's what would be expected in the market. Let's go over just quick, no real damage on the moving averages. Came back up above the 4 and the 8, but closed right basically at them. So no real significance there. Excuse me, in the NASDAQ. Let's go over to the S&P and take a look. S&P, in terms of its moving averages, we're still below. So it's just a consolidation day. It here more typical for fourth wave. So S&P, nice, doing nice. We'll see how this all actually pans out. So the 200, the SMA and the EMA, not even threatened. In fact, the 4 and the 8 were not even threatened. So, actually the 4, I guess, sort of was. So let's go down to the 4-hour chart and take a look at what we got. Yes, I'm going to say that this 4, if this is 2 and this is 4, it's a little bit bigger. We've gotten up to that 20. Now, I'm going to leave these in place because they still are effective. If we turn and we start to go down, that's the target. 41.86 for 87 is the target. Secondary target, 41.37. We've already surpassed the 100%, where minor wave 3 is now the longest out of 1 and 3 so far. So that's all in alignment, and that's fine. If this has to turn and we've got to consider this of the 5 and the completion point for minor wave 3, if this rally does kind of keep itself going. And we may have to do the same thing over again. I'm going to tell you, I might have to do it over in the NASDAQ, and we'll make adjustments for what happens. But in the S&P, I'm still looking for another swing down to finish up minute wave 5. So this fourth wave, let me come down one more so I can get the markers in. So this fourth wave, got to bring it down. I think it's kind of gone up pretty far, but not totally out of the game plan yet. So yeah, we were heading for 618 on a fourth wave. Not really expecting it. Actually, it went, excuse me, above 50, but came back down below. So 43.09, and again, I'm going to tell you what I would use. I'm going to use the line chart because it's still going to be in that same place, 43.13, 43.14. So we got as high as, I think this is 97. They're saying 43.04. So it got close. It got close. I will say that. And how would I deal with that if it did? As I just told you, I should be able to count this out to put the 5 down here and then to put the minor 3 underneath it. And this would be the start of a larger, the minor 4. I'm not necessarily, I still think we have one more swing down. So we'll see what happens tomorrow. But that would be the alternate view here, is that we're in a minor fourth wave correction and not just a smaller minuet fourth wave, because it is a little bit too large, but it's following and the pattern's not bad. Let's see how it all trades. So again, if it moves and we start to break here and then it's gonna flip. It has to. Would I still get that same possibility of this wave 4 still being in motion? It would truly be pretty big, but yes, and it would be that we would have an irregular B wave, and it's greater than. And let me show you. Let me just show you quickly. If we're looking at here, and what I'd have to add to this are the 236 and 382. And actually, I don't even need to because it's greater than 382. It basically came down. 382 was 42.40, I'm going to call it. And the low was 33, 35. So came down. If it is, then what I'm going to be looking for here is 1.618 coming back up. So I will leave that out there as the alternate right now, and that wave 4 is still in progress. Now, if that's the case, then what we're going to be looking for, get out of there. Let me put that back in. And we're going to be looking for, bing, there, and put it back down to here, 1.618. So we'd be looking for 43.88 to complete the fourth wave. Minute wave 1 is way up here. So possible. We had wave 4 fibs at 43.87. So if right now it's heading. It was pretty strong. So to relate it to the same pattern that's taking place in the NASDAQ would be that the rally continues. It's going to turn into where this turns into ABCA, that 4 gets moved, and this turns into B is your in irregular. So this is AB, 1, 2, 3, 4, 5, right? You get the C wave, and it comes in as an irregular B wave, and we're in a C wave up. It'll take us to 43.88. So there's the two. There's the two scenarios, both markets covered. And yeah, I take a deep sigh because the markets are just kind of like, oh, okay. And we're seeing more of these irregulars in a second and in a fourth wave than I normally would see. And on all different degrees. Normally when I would see them, they were on much larger degree, like a primary degree or a cycle degree or an intermediate degree. But on these smaller degrees, I didn't see that many. They were pretty clean, and now we're getting more of them. And again, I just think it's a function of how markets are traded now. 0 DTE options, options expirations every other day, or every day in the indexes. As we get all these massive moves in the spiders, tremendous volume in the spiders, tremendous volume, and that pushes things around. Volume will move things, period. Particularly when you're coming down, you're buying the spider, or you're buying the ES, or you're buying the SPX. You're buying all of the stocks. So again, both sides of this coin. If it's going to come swinging back down, then that's what we're looking for, 41.86 or lower. If it's going to go up and finish up here towards 43.88, we're still going to be looking for a wave 5, and it's still going to carry the same message. These will change, right? Because this is for minute wave 5. If it's not in progress yet, and it's going to come up to here, this will be moved up less than, let's just say 20 points. So it will change these levels a little bit. All right. Moving averages, let's just take a quick peek. We're not really threatening, but we will, if we get back to 42.88, we're going to come up and not test them. Right? That was good. I might just double check my number. Bing. 43.88. Okay, so 43.88. Go back over to the daily. 43.88. There it is right there. And it is above. So we'd be looking at it, and again, we probably would get a little bit of a flurry. Yeah, we broke back above, flurry, flurry, flurry. And it would produce more of a bullish bar up. But I'd keep it in the context. And we're likely on the way back down, we'll get the same type of a thing. That's how crazy it's going to be. So that's both sides of the coin for the S&P and also for the NASDAQ. NASDAQ more, I'm looking for that continuing move up to finish this whole thing. Here, this could turn if it goes from here and we start to decline along with the NASDAQ. Then we can keep it in play as it is. Otherwise, the 4 is going to get moved over ABC, irregular. We're moving up here to 1.618. That's the fib, by the way. If we're in an irregular in terms of the B wave, that B wave will normally come in 1.236, 1.382, 382 being the more common. But then the C wave would be expected to be 1.618 of the A wave. And that's that measurement right there. All right, I'm going to leave it right there for today. Tomorrow morning, pre-market, we do have a couple of things. We have initial jobless claims and the U.S. trade deficit, 8:30 a.m. Eastern, and then at 9 a.m. Eastern, 12 p.m. Eastern, and 12:15 Eastern, we have the Cleveland Fed president, the San Francisco Fed president, and the Fed Governor Barr all be talking. Governor Barr is going to be talking about the cyber bank risk. Interesting. I think the other two, they're actually talking about payment symposiums. So I'm not sure what they're going to be talking about in terms of anything, but they are going to be talking. All right. Have a great evening, everybody. Have a great trading day tomorrow. Next update on Thursday, October the 5th.